While we're here, let me pull up our YouTube channel and remind everybody about it.
All right.
So, first of all, welcome here. Welcome. Happy Friday. And I'm glad you're all here. Don't forget that about 2 months ago, I was able to upload probably 4.5 years worth of videos here
Oh God.
every Friday to the Alternative Investing Club channel on YouTube. So just go ahead and search for it on YouTube. You'll find it. And you will find tons and tons of great speakers here. Everybody from, Kenny, who I know is trying to buy a building over in Columbus, a skyscraper over in Columbus, Jason Hartman, Augusto Pinto, Gina, Jillian, she's a great attorney. So all sorts of great talks here. Go check it out. And we'll be adding JP to that collection as well. In addition to that, of course, the Alternative Investing Club has got a site. And we have our Speaker Hall of Fame here where everybody shows up who has previously spoken. And go check it out. So with that, we're going to wait a few more minutes to let people come in. And then we'll get started. And I'll fill the time as I always do by asking people, what topics would you like me to bring into the future? I know we do a lot of real estate. I'd love it if somebody out there could suggest to me some people to invest with for small business equity or venture equity potentially. I'd love to bring those people in. We're currently booked out in terms of speakers all the way to September, so it might be a little bit before I can fit these people in. But I certainly love having the leads.
I was going to say, I thought you filled the time sometimes with dad knock jokes, but that's
Probably
always
could.
a crowd. That's a crowd favorite sometimes.
JP, do you have a dad knock joke for
I
us?
have one. I have
Okay.
one bad one prepared.
Okay.
Okay.
Are there good
Knock knock.
ones?
No, sometimes there are. Knock knock.
Who's there?
Amos.
Amos who?
A mosquito bit me.
Oh, jeez. I am so happy that mosquitoes don't seem to be too bad yet in the air here. Oh. Oh, and I'm wearing a Hawaiian shirt, not
Yeah, you've
because I
got
put.
Hawaiian shirt Fridays going on.
I do. Actually, I'm not a huge Hawaiian shirt person. My wife told me she liked this shirt on me, and so I told her
Hey,
I'd try it
that's
and
right.
see if it works.
Take every win that you can get.
All right. Looks like we've got 50 people in the house, so let's get on to it. JP, welcome to the Alternative Investing Club. We are here providing education and opportunities for people to invest in private equity investments. Our history has been real estate focused, but we've recently expanded to include other types of passive investments too, whether that is oil and gas partnerships or credit litigation, or we've had some people come in talking about funds into small business SaaS companies and buying equity in small companies. We've had a person come in who had a fund where he was trading expensive barrels of whiskey and flipping them. So there's all sorts of ways to invest in other ventures. And we are building out a series of speakers that talk about them. So, JP, welcome to the group here. And go ahead and take a moment to introduce yourself.
Awesome. Thank you so much, Daniel. Hello, everybody. Happy Friday. I'm I'm grateful that you decided to have lunch with me, chatting with you today. I've got a special presentation that I prepared specifically just for this group. No one else has heard it before. Not many people have actually heard the story. So I think it's exciting as I'll be vulnerable here with you during the presentation. And I can't wait to share it. And I guess I should probably share my screen to get the thing going, huh?
Sounds good. And no need for you to monitor the chat. I'd almost rather you focus completely on the presentation, and I can monitor the chat for you
Yep.
and judiciously interrupt you whenever there's an on-key question.
Yep.
Unless you want me to hold them all to the end, I can do that too.
No. Hold them. Yeah, we'll hold them to the end. We'll hold them to the end. Throw them in
Okay.
there and we'll hold them to the end.
Okay, we'll do.
All right, cool. Everyone can see my screen?
Yep.
All right, great.
Although
So
we're seeing your whole desktop.
The whole
right
desktop.
now.
All right, let me change that to do, let's just do the, is annoying. No, I guess I can do portion of screen. I promise I do know how to use a computer. I just share
I mean, this
slide.
group is probably 85% Intel folks, and so we all understand that computers have bugs.
No, it's not even that. It's all right, well, let me just do this. Is
There you
that
go. I, and I
better?
think I think you can hit F11 in order to make it full
Yeah, I
screen.
can do the full screen here.
There you go.
That's pretty much it anyway.
That's nice.
Yeah. All right, cool. All right, well, I'll get started. So everyone, hello, my name is JP Albano. If you're old enough to remember the wrestlers from WWF, there is no relation to Captain Lou Albano, unless of course you loved him, then I would say he was my dad, but he's not really, but there is that connection there. So today I'm going to talk about a new approach to LP investing. Um, Before I get into that, I got to go into disclaimer. This is not a solicitation. We only work with 506C investors. I'm not even going to talk about a deal. I'm just going to talk about a story and what we do today for our investors. That's kind of really it. So just a CYA there. All right. So I mentioned I would kind of get vulnerable and go into a story here. So not many people know this story. So I'll go right into it. So I call it the 90 Days of Hell. So it starts like this. 3 years ago, I had the fortune of landing a massive deal under contract in, back then it was still an up and coming market. Um, it was a massive property, 464 units, 112 buildings, 42 acres of property, all in North Charleston, South Carolina. And what was crazy was, when we just got it under contract, we learned that there was a major developer in the industry. He announced a major plans to redevelop acres and acres of the former Navy yard and the Navy hospital that was across the street from the property into brand new mixed use goodness. And the race was really on, right? We had 90 days to raise $20 million. And in order to get this under contract, I had to agree to a total of $800,000 of my personal money as a non-refundable earnest money deposit to the seller. And what's the saying? If you want to, make an omelet, you got to break some eggs, right? So here's the setup. The rents were under market by what was, but that was really half the point. The place was really in the epicenter of a massive redevelopment announcement, and I'll show you some details of that here in a second. We met with the mayor's office, and they were stoked to have us help. They were stoked to have us or help us really in whatever capacity that they could, because really they wanted someone to do away with the eyesore that was there, right? And then shortly after getting under contract, my mentor and I visited the property, and we realized the massive potential, and we devised a plan for what would be a phased redevelopment. And we would slowly knock down some of the buildings and rebuild new apartments there at a much higher rent, obviously, right? And slowly bringing the area up one phase at a time. And it made a ton of sense, really, with kind of low risk if you stood back and thought about it. And I also had to rely on others to help me raise $20 million. At that point, that was the most I had ever raised. Actually, the most I had raised at that point was about $4 million. And I want to jump ahead. And then shortly after getting under contract, my mentor, sorry. And then the last piece was I had about 500K on the line at that point in time and 45 days to get going. So it was a 90 days of hell, but the first part of it was 45 days to get to that milestone. And then we had to either extend it or close on the contract there. So basically I had $500,000, on the line and 45 days to get going. This was the first part of the earnest money deposit. So let me kind of give you a picture of what this whole thing looked like. This is obviously a top-down view of the property. I mentioned there's 112 buildings there. And, this was the major road there. And I have another map I'll show you. But, the plan was to basically do this. Let me show you this better way. So we devised a way of breaking down the project into more manageable chunks, right? So phase one over here, phase two. And this is sort of a map of like showing, well, in the blue sections, we would put some mixed use things. And in the red sections, we put high density multifamily and whatever else. And the goal was to basically quadruple or quintuple the density in the area. That's where the opportunity was. We were buying this whole apartment complex, buying all this land, these 40 something acres, And if we can slowly increase the density in each of these things, it would be a massive payoff for everybody. And the fact that we were in this, epicenter of this major change. I think I should snap the picture before. Let me show you the other one. Hold on a second. So to give you the context here, this purple blob, this was the property, or is the property, I should say. And right here, right across, literally across the street, is the former Navy hospital. And all along that main drag, all these orange spots are other spots that were marked for redevelopment from this group. So like when I say we were at the epicenter of it, we we really were. And this is what got us really excited, right? Let me keep going here. Skip that. Yeah, this is just another kind of shot of like, our approach of breaking it up. So anyway, so basically what we did was, I hired an equity and debt broker to really help me, right? They promised the world. I gave them an exclusive. That's the way it really works with a lot of these equity and debt brokers for 45 days. And 45 days went by with, a few interested parties, but nobody would really bite. And I hired basically an incredible architect to help us build a vision for this phase redevelopment, and an analyst to help me build a very, very comprehensive data model to calculate all the cash flows for our phased redevelopment. It was actually pretty cool. The geek in me really loved that part. And really, I was racking up all the costs out of pocket. And literally from the moment to moment, I'd get a call from the broker. We'd get a group. We, say, let's get on the phone. We give them the pitch. I'd give it my all. And they'd say, great, give us a few days and we'll get some feedback for you. And a few days would invariably go by. And then, I get the inevitable, great deal, super excited for you, think you're a great guy, but, it's not really a fit for us, right? And I even got the architect to help me with introductions to other huge developers that he was working with. And we do the same thing. We get on the phone or an email with a mega player in the space. I mean, I lost count of how many times they'd say, we love this deal. It's just bad timing for us. We're on another project, right? And I was also having issues finding a lender that would understand how to underwrite a phased redevelopment, since they wanted us to invest in the property, right? Like actually do value add, but didn't want us to knock the buildings down to redevelop it because we spent all the money, putting work in the buildings, right? And then I found a group that had massive experience in construction and equity raising. And after weeks of negotiating, we came to an agreement to partner. They were going to raise equity for us, but by now I've had made my second earnest money deposit that was non-refundable. And I was all in for 800K. And we had, 45 more days to go, right? And group after group, we'd met with in Charleston. I'd give them the dog and pony show. I'd drive from Atlanta to Charleston. It was, 3-4 hour trip. Meet them there. They loved the area. They agreed. They loved the idea, and they seem to have, got it right. But for one dumb reason or another, they decide to pass ultimately. And so, two neighbors, two options. One neighbor, Brent, introduced me to a group that could have bought it all in cash, and all he needed was a week of a contract extension to fly out and visit the property. And basically, I had 4 days left on the contract. And around the same time, in passing, I mentioned to another neighbor of mine, John, that's his real name, I needed help with this deal. And he connected me with a super wealthy investor friend. His name is Bo. Now, Bo was this kind of no BS type of alpha male guy, right? Bo, though, he needed more time and asked me to get an extension. And the seller was really running out of his patience and wanted his justly earned 800K. And the seller was willing to give me more time, but wanted to increase the purchase price in exchange for more and more time. Basically, he was using the excuse, hey, I'm getting a lot of pressure from other backup contracts. If we're going to be able to extend it, we're going to need to adjust the purchase price because I can just sell it to the next guy for, $2-3 million more or whatever, right? And so basically, I was at a stalemate with Bo. The other group was also disinterested in paying the premium. Even though it was a slight one in purchase price in the grand scheme of things, but they were not, really interested in paying that. So basically what I found myself is that I had no banks, I had no equity, and I had no chance. And really just like that, 90 days of hard work, all the grind, all the effort, seemingly for nothing. The contract expired kind of silently and quietly on a weekday. And I realized a lot of things in going through that, which I'll share with everybody. So, first it was an incredible time to have gone through. My stress was through the roof. It completely ruined my summer. I had attempted something I could never have imagined, and I did it with confidence and ambition. I authentically believed I could do it, right? I needed to shore up my list of investors was an area that I really reinforced for me. I learned a ton about real estate, private equity, and business, in the mix. And I realized I don't like to rely on others for so much. And, when we needed to do things differently, well, basically we needed to do things differently to find our way as real estate investors. That was kind of the big takeaway there. So, let me explain, who the heck I am. Um, Basically, my name is JP. I've been in technology for more than 20 years. I used to be an engineer. I used to do Exchange deployments, VMware deployments, NetApp installs, all that crap. I got into technology as a sales and account rep working for a reseller almost 15 years ago. Through the grace of God, I went on to sell over $200 million to enterprise accounts. And I've been a top performing sales guy for, I don't know, 5 or 6 years now. And I love hoarding BMWs. I recently got into tactical shooting and training. And I'm immensely fascinated by psychedelics and plant medicine for healing purposes. So what does my real estate background look like? Well, I've done over 700 apartment units over 3 states. I've done over $60 million in transactions, and I own a real estate investment firm that performs our own in-house property management and construction management for our deals. We typically buy large apartment complexes, usually 200 plus units in the Southeast. But today we're a fund of funds manager, and I'll explain what that is next. We're sort of a unique beast given our experience as operators and now as a fund of fund manager. So what is fund of funds? Well, it means that we're pooling money together from our investors to invest in a deal as an LP, right? And through our network of other fund managers, we're able to attract an impressive number of other operators and sponsors who are looking for a one-stop shop for equity. Remember my issue with raising $20 million before? So because collectively as a group, we can bring in millions of dollars for a sponsor, we're able to collectively bargain, if you will, for better returns for our investors. So for example, let's just say a deal for an apartment building, they were giving out a 7% preferred return, and the minimum investment would be 100K. But if you invested $1 million, you can get an 8% pref, right? And maybe more back end. Well, with us, you'd be able to invest in that deal and earn more than the 7% pref without having to put in $1 million, right? Just as an example, each deal is obviously different. But more importantly, we're attracting these best-in-class operators for different asset classes like mobile home parks, build to rent, value add, medical offices, et cetera. You mentioned earlier, Daniel, oil and gas as well. And as a service, we're heavily scrutinizing these deals that we perform a very, very thorough due diligence process or inspection that's made up of more than 200 points on all aspects of the sponsor and obviously the deal itself. Now, while we can't guarantee 100% of anything, we really do our best to screen as much as we can to reduce the risk as much as we can up front. And then also, I think it's worthwhile mentioning that we also invest in these deals ourselves alongside our investors. And then lastly, because of our network, we're attracting incredible operators and we're gaining access to deals that you really just can't find anywhere else. Or if you did, it would take you a long time to kind of amass that sort of network and connection space. And so today, in addition to operating our existing assets, I also run a paid for investor club. I recently wrote a book, which went on to become an Amazon bestseller called So Rich You Can Quit. And if you'd like to get a free copy, a PDF copy of the book, just go here to sorichyyoucanquit.com/alt. That's specially made for you, Daniel, and your investors. And you can get a free copy of the full PDF. And also, you can also buy a copy on Amazon or Audible if you want to actually experience the whole thing. And if you're interested in applying for our investor club, you can do it here as well. That link will take you to a page. You got 2 options there, the PDF, or you can apply to be in the club. As I mentioned, it's an exclusive club. There is an application to fill out, and we'll review it and see if it's a good fit for us. And we've already funded 2 deals, and one of them has already started distributions, and the second one starts its distributions in August, just in a couple of months. And with that, Daniel, I am done with my my presentation.
Oh, okay. So we have a couple of questions in here, although everybody in there, feel free to put some more in there. Um, we have a question from Mr. AA.
Sure.
We have a quick comment from Glenn Cochran. Said it looks like Intel's firewall blocks access to your site.
Oh, all
I don't know,
right.
you may, I
You know
don't
what we'll
know.
do? You know what we'll do? We'll just I'll email you the link that you can share with the team. You can
Sure.
also take a picture of the QR code. That works too, as well, if you're not trying to do it from your
Yeah.
desktop.
Yep. How much are your investments? AA is asking, how much are your investments affected by market headwinds?
It's a good question. So I'm going to give the lawyer answer. I've gotten good at this. It depends. So right now, the investments in our fund of fund club are not currently affected. In fact, if they're anything, they're affected by the tailwinds. So what I mean by that, the two deals that we funded, both of them happen to be value add apartment deals. The operators that we are partnering with for that one, they have totally bought it right, right? They closed. One was 2 months ago. The other one they're closing next month. And these are deals that they're buying from distressed sellers. So, I've said not all along, but frequently, recently, that if you're in real estate, like there is such a buying opportunity, a tremendous buying opportunity that is in the mix. It's sort of the perfect storm of being caused by the quick rise in interest rates, what it's done to cap rates, is pushing a lot of potential buyers out of the pool, and put a lot of operators that if they don't have rate caps on their deals or they're trying to refinance into a new loan, they may not qualify for it. And it's putting them in a really distressed situation. So for example, the deal that we just finished raising capital for, they're buying it at a 25% discount over where it was a year ago. So if anything, I'm super excited about where the market's at. And there's a lot of opportunity to buy things at a great basis, great purchase price now that will set you up really, really well for the future. So that's just been my experience on the value add side. And obviously, I think there's elements of that in different asset classes as well. And that's why we like to partner with best in class sponsors, because they're the ones that are out there pounding the pavement, doing all of the brain damaging work. And ask me how I know that is, to find, the one deal out of the many that really kind of checks the boxes and works in today's environment.
All right. I'm going to go through with a couple of the more questions that we have here, and then I have a number of questions that I'd love to hear about your fund to fund experience.
Sure.
So HH is asking, we had AA and now we're having HH.
We need a
How did you
DB.
recover from losing 800K of your own personal money?
Yeah. Well, after my wife beat me up, no, my wife was actually very not understanding. She understood. She understood that there are risks there. I've been very fortunate that that was money that, I mean, I didn't have to mortgage my house for, right? Not everybody is in that position, but fortunately, that wasn't like, oh my God, honey, we're going to be on the streets sort of thing. Yes, it sucked. I've ratcheted it up to like an expensive learning lesson, right? That I probably wouldn't have changed for the world, all the experience there. I mean, yes, it's painful. It was expensive. Would I like to have the 800K in my account that I could put to work somewhere else? Of course, absolutely. But I feel like overall, it made me a better investor and gave me a level of perspective experience that, again, I wouldn't have got any other way. I could read and research and listen to podcasts. But going through the painful lesson there was really important. And I think it also helped force my business partner and I lovingly call him my business wife, Matt, that, there's got to be a better way for us. Because doing deals as a sponsor is really, really hard. I don't think not many investors get to see the behind the scenes of what goes on and how many deals you screen. They come into your mailbox, you spend 2-3 hours looking at them just to realize it's crap, you throw it out. And then when you do find the one out of dozens, you go through more iterations, you spend even more time going through it. And you really try to find the one that checks the boxes. And then it's a matter of like, all right, great, I got to sell it to the world. I got to sell it to the bank and equity groups and obviously investors. And getting to the finish line, getting to the wedding day, you're at your gown is on and you're at the altar, and then nobody shows up. It's really painful. And so yeah, recovering from it, I've gotten through it. It took probably a couple of months of licking my wounds, but I made a decision to like, okay, what can I learn from this? How can I get better, stronger, faster, better, right? From all these things. And as I've gotten older, I feel like I've gotten more spiritual. And I just learned that like these are all learning opportunities, everything, whether, it's really the healthiest way you can look at things. And that's it. And hopefully today I was able to kind of share something and be a little vulnerable to the team, and show us like, a day in the life as a sponsor, as an operator, like, what happens, what we put on the line to try to help make our investors money,
Yep. One quick comment here. I'm clicking on the web page that's here. I'm getting a page can't be found error.
Okay.
Um, and I had a couple other people in the text in the chat say the same thing. So
All right.
just, I guess, be aware that's going on. Everyone go to the top level domain and go that way then, I assume. Um, Glenn is asking, what was this year of what year was this learning deal you described?
So this one I went back because I kind of purged that out of my memory for a bit. I believe it was, and I have it on my thing here. One second. I want to say it was
You could probably
20.
just give an approximation
Yeah,
to,
I think it was
5 years
20.
ago, 10 years ago.
It was 21. So we were trying
Oh,
to, I
there you
have
go.
my whole deck here. It was September. So like September 20th was when the contract expired, and like right the 19th or so, they went on a Friday or something like that. That's where it was like, all right, silent weekend here. But yeah, it was 21.
Okay.
Yeah.
Um, Tell us, let's see. Somebody's asking what the price is to join your club. Is there what's the monetary cost?
Yeah. So it's not a lot of money. And I'll give you the number and I'll explain why. So the cost is, I think it's 250 one-time setup fee. And then it's, I want to say $49 a month, I believe is what it is. The reason why I am charging for it is the following, not because like all that money is going to help recoup the 800K. It's what I found is people take things seriously when they have skin in the game, right? And so, when I was putting together my tech sales investor club, I had amassed about 50 brand new tech sales investors in there. We put our first deal in front of them, and we got participation from about 6 of them out of the 50. And I felt like, even some of them didn't even open the emails. And it's like, I went through all this effort of putting this together for you. We do these calls. You explain you're looking for a way of taking the money that you've earned and having it grow for you. Great. Here's an opportunity. The least you can do is open the emails to check it out. And so I realized I needed to put a barrier for entry. I wanted to avoid tire kickers, and I wanted it to be not painful, but like, hey, look, I need you to take this seriously because I'm taking it seriously. And even if the timing isn't right for you, like, you get a deal, hey, whatever, that's fine. As long as there's this natural intent of like, yeah, I want to see deals. I want access to deals. I want deal flow. I want to learn. That's what I'm looking for. That's really what makes a good member of the club. So there was a bit more answer to your question, but I feel like that context gives it some more substance.
Here's an interesting question from a John Doe. So we've had an AA, an HH, and a John Doe. He's asking, how did you get the money to do the very first deal before you were rich?
Yeah. So I've earned all of my money through my tech sales career. So tech sales was a fantastic vehicle for, when I was an engineer. That was great. I kind of stumped. So basically, I was a solutions architect working for a reseller. The sales guys I was supporting, great guy. One day he literally decided he was going to be a New Orleans jazz band manager. God bless his soul, chasing his dreams. So he put his 2 weeks in, he resigned, and my bosses were like, hey, JP, can you cover for him until we find somebody else? Sure. I had no intent of being a account executive or a salesperson. And what I found was I was actually pretty good at it. I found that, clients were more comfortable having discussions with me because I was technical. And then it was easy to kind of overlay a business question like, hey, how much do you have to spend on this solution? Because I can either show you a Pinto or a Ferrari here, but I got to know what we're working with. And so I just was been very graced with having a good book of business and getting not lucky but fortunate by being in good places with the right time with good clients and making a lot of money with that. And then realizing that I didn't want to pay a lot of money in taxes. I didn't want to keep selling hard drives for the rest of my life. I went down a path of researching, okay, how do I escape sales? Like, what's the end game? And I realized capital gains is how you really should be earning your money, right? And I went down a detour of trying to figure out how to do day trading. Terrible idea, right? Wasted a bunch of time, learned how to read candlestick charts, but it's super stressful. But what I realized, what I was looking for was this elusive passive income, right? And so I'm like, all right, cool. I'll go be a passive investor in real estate. But what I found was I loved real estate. I loved the camaraderie. I loved the potential of partnership with people. Everyone was so like, hey, let's work together. And in sales, it can be very life sucking. And so I'm like, crap, this is like my new plan. Let me take whatever money I've earned from sales, and let me invest it into the real estate business. Let me hire teams and people and grow and scale that way. And that's what we did.
All right. Anita is asking, can you share about some of the other deals that you've been involved with? She particularly said some of the other successful deals, but
Yes.
I'll put in, if you want to share about an unsuccessful deal too, that's
No,
fine.
they're all, yeah, they're all, this is the only, and so we've round tripped three other deal as operators, right? We've round tripped, meaning we've completely sold, gone full cycle. It's funny. There's all these inside stupid words to describe this stuff, but round tripped three other deals. Presently our track record, and I can pull it up, stands at 59% average annual return for our completed deals. I have three deals right now that we currently own. We sold a bunch of deals, three deals right now. One is a 278 unit apartment complex in Ohio. That one, we have a fixed rate loan on there. We haven't exited yet, so I can't talk about returns. We have another deal in Riverdale. It's in Georgia. It's 92 units. That one we just refinanced to a fixed rate loan. That one we haven't exited yet, so I don't have a number for you. And then I have my first deal, second deal, my second deal under contract. Sorry, my second deal ever. It's under contract to sell, and that one, if we close by July, that one will almost be a 4x return on capital. Now, these are extraordinary returns. I don't tell anybody this is the sort of returns we get for our investors. We aim for, like everybody else, 15, 18% average annual return, but we obviously aim for the moon. But just so happens our existing track record has us at a 59% average annual return for our fully cycled deals.
All right. Glenn is asking, how did you build an in-house set of sponsor services after you had many partnership engagements not go well? I don't know if anyway, what did you do differently in these last 3 years to build your team?
Let's see. So I understand the question, and I'm trying to find a good way of giving an answer for this. So, what happened was a couple things. When you go through the 90 days of hell, I'm talking to everybody, private equity groups, family offices, different lenders, and even coming out the other end of it, right? Like, people respect you for going after an ambitious deal, and you build a relationship, because the only way you're going to build a relationship with someone is to work together, right? It's great. Hi, nice to meet you at a conference, and that's kind of really it. But like you when you're in the trenches together, that's when you get to see what makes them, right? How they respond to emails, how they respond to adversity. And I came out of that with a lot of new friends that I didn't have before. So, that was kind of one part. And then the second part was like, now knowing what I know about like what I don't want, right? Things that went wrong, how to do it better. It just made us a bit sharper on who we were looking for to want to partner with later on. And, that was, 3-4 years ago, right? And since that time, I've been involved in a number of real estate masterminds and groups. And so the network grows, and we just find new people that are, better, as ambitious, all those things. And you kind of rebuild the team. And that's kind of really it.
Yep.
It
I'm
sounds simple,
actually,
but, right? But
I'm
that's
kind of
it.
curious which masterminds you're involved in, because I always like to keep my eye on what's going on there.
Yeah, the
If you want to
mastermind.
share, you don't have
Yeah,
to
the
share.
masterminds that I'm in, they're really focused for operators, or for capital raisers, or for operators. So like, people that just, they have their business and they want to raise more capital for it, or whatever else.
Okay. Okay. Let's see here. The real estate market has changed quite a bit over the last 2 to 3 years. How has your strategy changed in response to it?
Yeah, that's a great question. So number one, I mentioned it briefly before. It's just like right now, I'll back up. So in going through all of this, it became crystal clear that I don't want to have to rely on other people, right, to bring in money for our deals. And the thing that we didn't do, or I didn't do early on, my partner Matt and I, early on, there were three things that you need to be successful in real estate. You got to find good deals, operate them well, and then raise capital for it. We focused specifically on just doing two of those things, finding good deals and operating them well. We thought we would just find other partners to help us bring capital for our deals. And it worked for a little bit, but then you're still relying on other people. And ultimately for us, it just didn't work. And so I spent the last year-ish, really honing my marketing skills, writing a book, really getting active on LinkedIn, creating podcasts. Like all of 23 up to 24 was all about rolling up my sleeves and learning everything I can about marketing efforts. And the goal is to really build out slowly over time my investor base so that when we are ready to do our own deals again, we've got the equity base behind us. But in the meantime, like there's a way of stepping stone our way to there. I started my investor club, right? I want to be able to put great deals in front of our investors. I want to help them with deal flow. I want them to help put their money to work, and I want them to do it in a diversified way. Like, let's work with best-in-class operators. Let's diversify in markets. Let's diversify in asset classes. And so you're getting exposure to all these things. And then I'm not going to put a timeline, but at some point in the future, when we're ready, we want to do more of our own deals, or we might just like the fund-to-fund models. We'll have an investor base to reach out to it and ideally, be able to raise capital in a quick period of time. So that's my long-winded answer to a very, very good question.
How do you like the fund to funds model versus a co-GP model? I happen to agree with you. I think that being a co-GP definitely opens yourself up to risks that you wouldn't take if you were in a fund to funds model investing as an LP. And at least, for my own personal business, I've gone the way of being a fund of funds, and we started a club fund here that's kind of the same thing.
Exactly.
How do you like that transition, and what's your experience been?
So there's kind of two things. One, where right now we've got one program, I'm working on another one. One program is where, we're contributing part of the capital, right? It's not all the capital for a sponsor, it's part of it, right? And even way, that's still bringing in a substantial amount of capital for these sponsors, these operators, right? So much so that we can negotiate better terms. So that's fantastic. The other piece that we're in the works of is being able to raise all of the capital, be full service for a sponsor. And that will obviously allow us to even negotiate even stronger terms. We're working on that behind the scenes, but that's something that we'd like to be able to offer to our investors at some point in time. What I like about it is a couple of things. One, we're negotiating better terms or economics for us and for our investors, and that's great. Two, we're LPs, so we're not really getting involved in the day-to-day. I can tell you, as an operator with a property management company with 300 units that we're actively managing today, being a landlord is a pain in the ass. And thankfully my partner Matt handles that, but like it is a seemingly never-ending slog of stuff. These are people's lives that we're dealing with, right? And life happens. Car breaks down, the snow truck break, all the stuff happens. And so, it's kind of nice not having to be involved in that and letting a truly vertically integrated operator manage those things if you're doing, multifamily, right? It's seemingly a faster, shorter runway to get, more deal flow, right? And the last piece I'll mention is this idea that, we get to be more picky and choosy with our deals because of this, because we've got, a service, a valuable service to these sponsors. We get to be choosy on how and what deals we want to attach our name onto and what kind of risk we want to put in front of our investors. So I think it right now checks all the boxes.
All right. And Kay is asking, can you paint a picture of what one can expect? Oh, actually, let me start with that. I'm sorry. I'll come back to Kay's question.
All right.
This is a quick one. Do you need to be an accredited investor in order to join? I
Yes.
assume he means join your club.
Yes. Presently, yes. The way our fund is set up, it is we can only accept 506C accredited investors. If there is enough interest, and I would say reach out, because if there's enough interest, the problem is it costs about 20 grand to set up the fund legal paperwork. So it doesn't make sense for us to do that if I've got 3 unaccredited investors. If I have a decent amount of them, I don't know what a decent amount is. It could be a dozen or so. Then I can explore doing that. And then I can open up a separate vehicle just for those. And then we have an existing relationship, and then we can show you deals. So right now it's just accredited investors, but if you're curious, I'd love to add your name to our waiting list, and there's no harm in that, right? When we get to a critical mass, absolutely could reach out and say, hey, we've opened up the 506B offering, and we could have a conversation.
All right. Kay is asking, what is the experience like when somebody invests with you? And he put down a sample amount of 100K.
Yeah.
Yeah.
So the experience. So we try to make it like there's a community feel. So there's a couple of things in the club. Number one, you get access to our education. Your group is a bit unique in that it sounds like a lot of your your group members are educated in real estate. I have to assume everyone's coming from zero, right? And a lot of my tech sales guys are, and gals. So we start them off with a 10-week program. You get an email a week of educational content. It's content I've created, I recorded, basically a presentation that I do a Loom on, and I'm showcasing the basics, how apartments operate, how investors make money, how investors make returns, right? How we make money as sponsors, how we find deals, how we underwrite deals, the markets we look into, all those basic things. And the idea is when you come into a deal, you at least have some kind of framework, and it's not like, drinking from a fire hose, right? So there's an educational content aspect of it. Two, we're working on building out the community aspect of it. We love the idea of having kind of a close knit, just like you got here, Daniel, right? Close knit community where I could, people can ask questions. I can record off the cuff looms, go into more details about things, or more importantly, be able to share deals with people on a private, offline manner. Like, hey, we looked at this deal. We didn't go into it for XYZ reasons, and share that sort of insight and knowledge with our investors that we can't do kind of publicly, so kind of like NDA sort of stuff. And then when you invest with us, we have a secure investor portal. You've got a dashboard. It looks like your brokerage account, right? You got your dollar investment in there. And then depending on the sponsor, as we get distributions, we make distributions right into your bank account from our portal. And then what's cool about our platform is if you're invested in multiple deals, everyone hates K1s. We hate K1s too. You get one K1. So you could be in 20 different deals with us, right, in our fund, and you get one K1 document. And of course, that's obviously beholden, or we're beholden to the individual sponsor on there, but you get one document from us, and that makes things a lot easier during tax time. And then, we like to give special gifts. I don't want to ruin the surprise, but we like to surprise you with delightful things randomly as an investor in our club.
All right. And I'm always curious. I'm going to ask a little behind the scenes. Which investor portal do you use?
We are using Avestor.
Investor. Okay.
Yep.
Hey, if you guys want to find out more about Investor, they came in to the group in 2020, and we've got their talk up on our site.
Yeah, was it?
And two of the three founders are Intel employees,
Yep,
or were
yep.
Intel employees at the time, and we're in this club.
Sanjay, yeah, Sanjay and Badri are the two dudes.
Yep, yep. Sanjay was an Intel engineer and in this
Exactly.
club, and
Yep.
yeah. Anyway,
It's a small world, Daniel. That's what it is.
yeah, it is. It is. And in this world too, after you've been in it for a while, you have a tendency to get to know a lot of the people that are in
Exactly.
it.
Exactly.
Jason is asking, have you ever considered opportunity zone investments?
Yes.
And what are your thoughts around it?
Yeah. So it's funny. The in my presentation, there were two groups that popped up. Brett introduced me to one guy, and then John introduced me to Bo. The other guy, I forgot his name, but his whole thing was investing in opportunity funds. He had an opportunity zone fund. It's a lot of words. And the thing for us as a sponsor, they were kind of hard to find, right? Like you're just trying to find this perfect storm. It's got to be certain asset in an identified opportunity zone. And for those of you that don't know what an opportunity zone, it's basically like an area that the local government has designated as like, this is a war zone and we need to fix it. So we are going to find investors. We're going to help defer, property taxes on there. We're going to give you all this great tax benefits for investing in there, but you got to keep your investment in there for like 10 years. That's kind of the short. So it's kind of hard to find. Your money's kind of tied up for 10 years. But there's a lot of tax benefits for doing that if that's like an itch that you're trying to scratch as an investor. So that's like one of our challenges as a sponsor or an operator, like we were running into. Like we'd love to find a multifamily deal that made sense in an opportunity zone, right? Because we could find money for it. Now, as a fund of funds manager, we haven't been presented. We have not been presented with deals that are in opportunity zones. Not that it's a bad or good thing, we just haven't. Lately, we've been seeing a lot of medical office projects, which are really interesting, especially if you look at the demographics of the population today and their aging and their needs for medical services. That seems to be like a really hot space. That and like dental offices in medical offices as well. So opportunity zones seem to have cooled down a little bit in my experience. So yeah, that's that.
Yeah, opportunity zones are an interesting creature because, and I agree with you, they definitely have cooled down in the last 2 years or so. They were a little more popular, 3 or 4 years ago.
Yeah, to the Wild West.
Yeah, it was the Wild West, and my experience is that some of them were actually in areas of need, and some of them were not, and so opportunity was a little bit of a misnomer. But the tax advantages were good because if you put
Yep.
your money in for a 10-year minimum period,
Yep.
you would get great tax benefits out the other
Yep.
side.
Yep.
My personal experience too, because we actually bid on a couple of properties that
Yep.
were opportunity zones, and I tended to find that they tended to get bid up in price a little bit more because they
Yeah.
had the allure of that as well. So I had to be really careful about, if you're going to be in an opportunity zone, it's got to be in at the right price.
Yeah, it's like it forced you to overpay for it, which depending on your strategy and what the opportunity for it was, it sometimes erased
Might do
all
it.
of the opportunity zone upside. And you're like, well, what's the point of doing this?
Yeah, yeah, it absolutely could. All right. Are there any other questions in here? I have some people that are direct messaging me, and thank you for your questions here. Um, but I wanted to ask you a little bit about more about your fund to funds. So,
Sure.
are you actually you're investing in other people's funds as an LP? Do you
Yes.
have the reverse capability where you have other people that raise capital for you through their own funds? Does it support feeder funds, I guess would be the question.
The
Because I've
answer is
seen,
yes. So for example, let's just say for argument's sake, you were interested in, hey, look, I've got, $500,000. I'd love to invest in your thing, right? And we're going to put it together into an oil and gas deal, argument's sake, that we're raising capital for. Yeah, because the way it looks for us is we have an investor, a single investor. Who's behind that? It doesn't really matter as long as they are accredited investors. That's really the only delineation.
okay, okay.
Yeah.
Yeah, that's interesting. I've seen a number, I'm always interested in reading through people's legal docs, and I've seen a number of ways of setting it up, and
Yep.
it's still a little bit of a wild west out there, but I think the industry's pretty quickly consolidating around kind of
Yes.
standard terms in their legal docs.
Exactly.
All right. Peter is asking, does the investor get tax advantages as just like any other syndication?
Answer is generally yes. It does depend on the deal itself. So each deal is different, right? If it's a deal it's a value add deal and the sponsor has disclosed in their subscription agreement or their operating agreement, hey, we're going to share all in with the tax advantages or depreciation to our investors, or sometimes they keep half of it for themselves. So it is on a deal by deal basis, but I know personally speaking for our fund, we haven't set it up where it's like, okay, only the managers get to keep all the tax benefits, right? We're not doing anything like that. We're sharing that with our investors. So if I'm in the deal, for 100K along with everybody else, I'm prorated with that. But we're not taking any kind of special things for us as the managers to take extra tax things for us.
And one question that I always ask people that have funds too is, what's your lockup period? Obviously, if you're getting into deals that require you to deploy capital for a 5-year period or a 7-year period or whatever it is, it makes it difficult to buy and sell the fund along the way. Or I'm sorry, is it a closed-end fund or an open-end fund that you
It's
can
open
buy and
and
sell?
evergreen fund. So it's not
Okay.
it's not closed. And what's great about a lot of nice things about it is just it's super customized, right? So if you
Yep.
as an investor, you like only investing in apartment deals, and we have apartment deals and mobile home parks and build to rent, you could just pick the ones that you want to invest in, right? If you don't want to invest in all of them, that's fine too. You can kind of pick and choose. And as far as the hold period, right? It's obviously dependent on the asset itself that we're invested in. So we
Gotcha.
try to look for deals that are 3 to 5 year in length, like everybody else. But we also are trying to identify deals that have just a variation of timeline. So ones that might be like quick hit, 12 months sort of thing, like almost like a debt fund opportunities for us to get into, or maybe some midterm things. There was a mobile home park deal we saw. It was a 10-year timeline, but you got all your money back in 7 years. And then from that point on, it was just, cash flow, right? So we just look for variety. We want to be, my business partner, Matt, says, imagine we have a storefront. We got all these shelves. On each shelf, we want to have different investment options depending on what you're looking to buy. That's
Okay.
what we're trying to do.
Yeah, I know it's some deals have better cash flow, some deals have better
Correct.
upside appreciation, some have better
Exactly.
tax benefits, some have better liquidity or
Yep.
shorter hold
Yep.
periods.
Yep.
It's
And all,
always all these things you have to balance when you're
and
investing in.
and all of our investors, they're all in different places of their life, right? And their financial
Yeah.
journey. Some, maybe their goal is to retire in the next 7 years. Some have 15, 20 to before they want to retire, or at least be at a point where they've offset their W-2 income with passive income, right? So, it's our job to just find a variety of those things to meet the needs of different people in different places.
Okay. Let's see. What do I have any other? I don't have any other questions right now at the moment. And we're almost up at the top of the hour. If you have any
Daniel, I
questions,
have one.
great. I was just going to say, take yourself off mute and say it.
Hey, William.
Hi. With all the different investment options you have you did any comparison to see which one gives you a better return and under which conditions as the market changes?
I might need some more information on that. Give me an example of what you're looking for me to answer.
So if you have like apartments versus storage sheds versus any other different flavors.
Yep.
And the reason why I asked that, because all of your costs are the same. The only variable is the investment choice.
Yeah. Yeah. So here's the way we look, the lens we look at it. When we raise capital for a deal, right? Usually, like, we announce the deal, and usually it's a 2-week window. So we make the deal announcement, we have a webinar recording, we have an opening for the soft commit, usually a week after the webinar is out. And then you've got a short window to kind of close. So our goal is to try to put as many deals as we can in front of our investors. When we're picking deals to latch onto and present to our investors, we're kind of committing to that, right? Because I can't put 5 deals in front of you simultaneously. It's very confusing and no one wants to see that. So it's one deal at a time. We're not looking at it as like, well, what's the option between a mobile home park deal and a self-storage deal? We kind of pick the one that we feel is right with the least amount of perceived risk based on our due diligence on it. And then we kind of commit to that one. Hey, that's what we're working on right now. When the capital is closed for that one, it's done. Great. We put that away. Now we're on the hunt to the next one. If that other one that we passed is still around, we'll revisit it. If not, we're working on the next one. And our original intent was to do a deal a month. But what we found was I didn't want to commit ourselves to this one number, because it meant that if we couldn't find anything and the month was closing, I got to put something in front of you. And I didn't like that idea. I wanted to have the freedom of being picky and choosy and selective with our deals, because ultimately, again, the goal was to work with best-in-class operators for deals that we perceived as having the lowest amount of risk. And if we weren't finding those or being exposed to those, then I'm not just going to pick anything to just throw in front of you just for the sake of throwing in front of you. Does that answer your question, William?
Slightly, but if you were to look back over the deals you've done, which category has yielded the best?
It's too soon to tell that. And also, it would be a lot of, we started our fund to funds business at the end of last year. So we've done 2 deals. We've participated in 2 deals right now. And what you're asking for would require us to, every deal we look at, make note of it, and then have to keep tabs on it for the next 3 to 5 years as they fully cycled out, to kind of match and see which of the ones, worked out the best, right? And that's kind of hard to do, and also very resource intensive to do that. So I guess the answer is it's impossible to tell right now.
Gotcha.
It's a good question, though.
All right. I think we've got 4 minutes left, as there's time for one last question. And if not, we will sign it off. Oh, Kay is asking, drop a link. I do not understand your question, Kay. Okay. Peter's asking, do you participate in 100% of the deals that you present to your investors? Kay wants a link to your PDF book.
Yep. Just hit me up on LinkedIn. You gotta put my email. I'll put my email.
Yeah, feel free to put the email in chat or your LinkedIn.
At significant LCs.
And while you are doing that, I'm going to ask everybody to take themselves off mute and thank JP for coming in and talking to us today.
Thank you, Jake. Thanks,
Thanks,
JP.
Thank you, JP.
Thank you.
Thank you.
Thank you.
JP.
Thank you.
JP.
Thank you very much. Thank you.
Yeah, thank you.
Thank you.
Thank you,
God
JP.
bless.
Thanks, JP.
Hey, thank you for that. Daniel, it's great having everyone hear their voice. They're not just like these nameless voids. Thank you for that. What was the question that,
Do you participate in 100% of the deals that you present?
yes. Yes. So to date,
Yeah.
out of the 2 deals, I've participated in both of those. I look at it like this. Hey, man, I've got money has to grow for me too. Why not piggyback on the work that I'm already doing? So yes, absolutely. I've currently participated and I plan on participating on all the deals because it makes investors feel better knowing that we're eating our own dog food. And again, I got to put my money to work. So I might as well put it to work.
Yep. All right, next week we have Emily Courtwright coming in, and she's going to be talking to us about mortgage notes and how to invest cash and hold cash and what sorts of accounts to put it into. So that'll be an interesting talk. And I hope that all of you have a wonderful first week of summer, first weekend of summer. Have a good day.
Thanks, everybody.
You too,
JP,
Daniel.
thank
Thank
you.
you.
Daniel,
Thank
you
you.
too.
Bye.
I am going to try and get the chat here. Zoom, for whatever reason, when I download the chat, will only put the first 3 words of each line in and cut the rest off, which that didn't used to be the case. So in the past, if I said I would get your question and get back to you, I apologize for that. Please send it to me. Feel free to email me at any time, and I will take those questions or send them on to the speakers if they need to be. And with that, have a good day.